Hello everyone. Welcome to the Stock Minds web channel. In the ever-competitive athletic footwear and apparel market, investors are constantly on the lookout for companies that combine strong growth with reasonable value. On Holding, NYSE ONON is one such name that has recently commanded more attention. Its Q2 2025 earnings displayed both accelerating top-line momentum and some pressure on profitability metrics, making it an intriguing case study. In this video, we will dive into ON Holding recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About ON Holding. Founded in 2010 and headquartered in Zurich, Switzerland, ON Holding AG, commonly referred to as ON, is a Swiss-based performance footwear, apparel, and accessories brand. Its mission centers on combining cutting-edge engineering, design, and lifestyle appeal to serve runners, outdoor enthusiasts, and all-day active consumers. ON sells through multiple channels: direct-to-consumer, DTC, e-commerce, and owned stores, wholesale partners, retailers, distributors, and branded retail footprint. ON Holding financial performance. In Q2 2025, ON Holding reported revenue of $944.3 million, marking a substantial 49.44% increase from $632 million in the same quarter last year. However, profitability came under pressure as earnings per share (EPS) declined to -16 compared to 10 cents in Q2 2024, a sharp 260% decrease. On a trailing 12-month TTM basis, revenue reached $3.42 billion, up an impressive 53.64% from $2.23 billion a year earlier, while EPS stood at 52 cents, slightly lower than last year's 53 cents, reflecting a modest 1.89% decline. Encouragingly, free cash flow per share improved to $1.34, a 7.2% increase from $1.25 in the prior year, underscoring the company's ability to generate strong cash returns. ON's profitability ratios remain healthy, with a gross profit margin of 61%, net profit margin of 5%, and a robust free cash flow margin of 15.61%. Efficiency metrics also reflect solid performance, as return on assets (ROA) stands at 5.34% and return on equity (ROE) at 10.34%. supported by a conservative debt-to-equity ratio of 0.36. Over the past 5 years, ON Holding has grown its revenue at a 51% CAGR. Net income and free cash flow turned positive in 2023 and have continued to grow rapidly. ON Holding fiscal 2025 financial forecast. Looking ahead, analysts forecast 2025 revenue of $3.72 billion, a 42.65% increase from $2.61 billion in 2024, alongside a projected non-GAAP EPS of 81 cents, which would represent a 25.39% decline from $1.09 in 2024. Reflecting optimism in ON's growth trajectory, Wall Street analysts maintain a buy rating, with a consensus price target of $66.36, offering 56.69% potential upside and the highest of $79.86, suggesting as much as 88.53% upside from current levels. ON stock price performance and valuation. At the time this video was created, the stock was trading at $42.35 per share. ON Holding stock has declined -15.5% over the past year, underperforming the S&P 500, which increased 16.1% during the same period. Since its IPO in September 2021, the stock has only increased 8.7%, underperformed the broader index, which has risen 50.9% in that time frame, but this makes the stock valuation more reasonable. From a valuation perspective, ON trades at a price-to-sales PS ratio of 4.15 on a trailing 12-month basis, with a forward PS of 3.82, a non-GAAP forward price-to-earnings PE of 53.52, and a price-to-free cash flow PFCF ratio of 31.27. Based on Fiscal.ai data, if we look at the valuation since 2024, The forward PS, forward PE, and PFCF are below the average. This shows potential undervaluation in ON Holdings stock as the business still projected to grow fast in the upcoming years. ON Holdings growth potential. ON Holdings growth prospects remain robust, driven by several factors. 1. Direct-to-consumer channel dominance and market expansion. ON Holdings' most significant growth driver in Q2 2025 was its exceptional direct-to-consumer DTC performance, with DTC sales surging 47.2% year-over-year to 308.3 million Swiss francs, representing 41.1% of total quarterly sales, which is the highest Q2 share in its history. This channel expansion is crucial as it delivers higher margins than wholesale, helping improve the gross profit margin from 59.9% to 61.5%. ON's sophisticated multi-channel strategy integrates e-commerce with premium retail store growth, including flagship locations in Paris, London, Milan, Hong Kong, New York, and Los Angeles. Management plans to increase physical stores from 53 to 100, showing strong confidence in retail expansion, complemented by digital engagement via brand partnerships and celebrity endorsements like Zendaya. This diversification enhances control over customer experience, pricing, and brand narrative, reducing reliance on wholesale partners. 2. Asia-Pacific regional momentum and global market penetration. ON Holdings' Asia-Pacific growth in Q2 2025 was remarkable, with sales more than doubling year-over-year, marking a 101.3% increase and reaching 119.2 million Swiss francs, or 110.9% on a constant currency basis. This region is now ON's fastest-growing segment, fueled primarily by Greater China's sales climbing roughly 50% year-over-year. Strategic retail expansions in China, combined with strong e-commerce growth, have enabled ON to capture key market share in the largest consumer market globally. Worldwide, sales in EMEA rose 42.9% to 197.8 million Swiss francs, while Americas sales grew 16.8% to 432.3 million Swiss francs, reflecting broad global demand. CEO Martin Hoffmann highlighted robust Chinese consumer activity, with approximately 50% same-store retail growth, plus stronger e-commerce results. This geographic diversification lowers concentration risk and positions ON to benefit from Asia's expanding middle class and growing interest in athletic lifestyles. 3. Product innovation and premium brand positioning. ON Holdings' commitment to innovation and premium positioning drives its competitive edge in the athletic footwear market. The company offers 9 footwear franchises, each generating over 5% of revenue, showcasing diversification beyond its signature CloudTech technology. Recent launches such as Cloud 6, Cloud Surfer 2, and the Cloud Tilt collaboration with luxury brand Loewe highlight ON's blend of performance and style. Its groundbreaking LightSpray technology revolutionizes manufacturing. A robotic arm creates ultralight one-piece uppers in a single 3-minute step, reducing components from 40 to 7 and cutting CO2 emissions by 75%. Supported by partnerships with 165-plus elite athletes, including Roger Federer, ON reinforces performance credibility. This premium pricing strategy sustains gross margins over 60%, outpacing industry averages, while ON steadily gains market share from Nike and Adidas, which hold 58% of global share compared to ON's growing 3%. Risks to consider. While ON Holdings growth prospect is strong, we should be mindful of potential risks. 1. Tariff and trade risk. A potential tariff increase of 20 to 25% on products made in Vietnam poses a significant margin risk for ON Holdings AG. This tariff hike could reduce profitability by 150 to 200 basis points if the company is unable to fully pass these costs on to customers. However, raising prices to offset tariffs may negatively affect consumer demand, putting pressure on revenue growth and earnings stability in key markets reliant on Vietnamese-made goods. 2. Foreign exchange, FX volatility. As a global company with sizable international sales, ON Holdings AG is exposed to foreign exchange fluctuations, that could adversely affect its revenues and profit margins. Changes in currency exchange rates create unpredictability in financial outcomes, impacting both the value of sales booked in different currencies and the cost structure. This exchange rate volatility adds a layer of financial uncertainty, challenging the company's ability to maintain stable earnings growth and profitability. 3. Intense competition and market expectations. The athletic footwear and apparel industry is highly competitive, with On holding a G under pressure to sustain rapid growth, continuous product innovation, and expand its retail presence. Any failure to meet earnings expectations or slower growth than anticipated could negatively impact the company's stock price and weaken investor confidence, given the intense market rivalry and high expectations for performance in this premium segment. Conclusion: On Holdings Q2 2025 results highlight a company with impressive revenue growth, solid cash generation, and strong brand momentum despite temporary earnings pressures. With expanding direct-to-consumer sales, global market penetration, and product diversification, ON is well positioned for long-term growth. Valuation remains elevated, but analysts see meaningful upside supported by robust fundamentals and favorable forecasts. While risks such as competition and profitability volatility exist, On Holding offers an attractive growth story, making it a compelling buy-and-hold opportunity for investors. But remember, this is not a financial advice. What do you think about On Holding? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.